Good morning and welcome to the ADS Securities Markets Update. Today we will cover the central bank's decision in New Zealand and Canada in addition to the jobs report in Australia, and finally we'll review the Chinese data in Asia, and we'll also preview the upcoming economic releases and events during the day ahead. Beginning with the Bank of Canada decision yesterday, the bank left the main rate unchanged as widely expected, but the bank also, or the tone of the bank, were also balanced despite the fact that the economy is in a recession. The bank noted that the previous rate cuts is working their way through the economy, and the dynamics of the GDP growth seen in July remain intact, hoping for better readings in the coming months. And on inflation, the bank also noted that the inflation outlook in the zone for which 0.5% rate is also appropriate. We've seen also some. That's why we've seen some fluctuation on the dollar CAD yesterday, declining first at the beginning of or right after the decision, and then we've seen a rebound back up also toward 13 or 32.50s. However, at the same time, the pattern that we've seen right now remains within the downside, or it's still a bearish pattern as far as we continue to trade within this tight range or within these two lines. For the time being, we're still waiting for more or further evidences to clear the view on dollar CAD, especially that oil prices also remains under pressure. So for the time being, we'll be waiting for a break below or above one of these two levels to clear the view. As for the Reserve Bank of New Zealand decision, the bank also decided to cut the rate by 25 basis points as widely expected back toward 2.75% with a dovish tone, hinting for further easing in the coming months or in the coming meetings. Moreover, the bank also noted that further New Zealand dollar depreciation is appropriate, which also led the Kiwi to decline across the board right after the bank decision. At the same time, the bank also cuts the GDP growth for Q1 of 2016 or next year to 2.2%, down from 3.3%, and the inflation estimates also were cut for the Q1 of 2016 to 1.5, down from 1.6. At the same time, we have to watch also today the latest lows for the Kiwi dollar around 62 or 62.30s. At the same time, the technical indicators are heavily oversold. Therefore, we might see some sort of technical retracement to the upside before the trend resumes. During the Asian session today, there were a collection of economic releases from Japan, Australia, and China, which had a notable impact on the markets. Beginning with Japan, the core machinery orders tumbled or unexpectedly declined back by 3.6% in July after declining by 7.9% in June. This is despite the fact that estimates were to rise by 3.4%, and this is the second monthly decline in a row, one we have not seen since also the beginning of last year. In Australia, the jobs report was released during the Asian session with better than expected outcomes. First of all, the employment change increased by 17.4 thousand in August after 39.2 thousand in July, while it had been anticipated also to increase by 5.2 thousand. The full-time jobs increased by 11.5 thousand, while the part-time jobs added only 5.9 also thousand, which is basically positive. At the same time, the unemployment rate ticked lower back again towards 6.2%, down from 6.3%. This is because of the participation rate, which also basically ticked also lower. In China, the inflation data were mixed. The year-over-year CPI advanced toward 2% target in August, up from 1.6% in July, while the estimates were to rise toward 1.8 only. And this is also the highest reading since August of last year. However, also the year-over-year PPI tumbled by 5.9% compared to another decline of 5.3%, while estimates were also to decline by 5.6%, and this is the biggest decline since 2009 or since the crisis in 2009. Going forward to the European session ahead, we'll be waiting for one major announcement from the UK, which is the Bank of England decision, the one which will be released at 11 GMT time, which is 15 Abu Dhabi time, and the estimates are to keep the current policy unchanged and the rates unchanged, while all eyes today will be on the members' votes again. In the previous meeting, one of the members called for a rate hike, while the rest of the voters or the rest of the members also voted in favor to keep the current policy unchanged. But today, any changes in the votes should have a notable impact on the market. But this is unlikely to add any new members to vote in favor for rate hike. Given the fact that the latest economic releases in the UK does not support an earlier rate hike, as inflation remains on the downside and the inflation expectations also remains on the downside. Finally, during the US session, a few economic figures will be released today from Canada and the US, which may have also another notable impact on the market. Beginning with Canada, we'll be waiting for the national house prices in addition to the capacity utilization rate. And in the US, we'll be waiting for the jobless claims, import prices, wholesale inventories, and finally for crude oil traders, we'll be waiting for the crude oil inventory, which was delayed also for today because of the holiday on Monday. Finally, looking at one technical chart for today, which is the US dollar index, which we've been tracking for the past few days. The index yesterday failed to break above its 100 and its 50-day moving average, as we noted in our previous report, and closed the day well below its 100-day moving average, with a reversal pattern on the daily chart, which is likely to be more clearer today. Our bearish outlook remains the same as long as the index also continued to trade below the 50-day moving average, which today stands at the same level of yesterday, around 96.60s. Moreover, the technical indicators are also turning lower on most of the time frames, and especially the daily chart, which also support our bearish outlook as well. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching. I'll see you once again tomorrow.